Hello and welcome to BQ Prime. You're catching us for a special earnings conversation at the Union Bank of India. Joining us is Mr. Ramasubramanian, who's an executive director at the bank. Thank you so much for making time to speak with us, sir. Union Bank of India reported its results yesterday evening. Quite a strong set of numbers. Year on year, the net profit has more than doubled. Net interest income grew by 16% and provisions fallen sharply. So just to sort of get us started, when you looked at the numbers yourself and they were being prepared, would you characterize the result as one being driven by a strong growth in core income or also the asset quality side of it, where there's some confidence, which is why provisions have been drawn down?
Yeah. It is not one time we have done this. This is over last 1 year. If you are looking at it, slowly we are strengthening our balance sheet with little higher provisioning. Now, if you are looking at our PCR rates are more than 90% now. So we are in an effort to strengthen our balance sheet. We have been doing it consistently. Quarter on quarter, and this time also we see that when the things are happening very good and there is less stress in the actually speaking in the corporate sector, we try to see that what best we will be able to strengthen the balance sheet. That is the reason we have gone forward this.
Okay, and going forward also you are full of confidence on asset quality, which is why provisions have been drawn down.
Absolutely, we are having this one, and all our systems are in place to avoid to restrict the slippages, and we have a feet on street campaign. Everything is going on all over the country, so that to reduce the slippages, and we expect the asset quality will be there, and we don't expect much provisioning
to be needed going forward. Okay. As a sectoral question, so now banks across the board, retail has been the flavor of the season for banks, especially unsecured retail credit. But I was looking at Union Bank's specific performance there. This year, retail book did grow by 19% year on year, but overall the composition hasn't changed too much.
Correct.
Large corporates are still big, MSME, agriculture are still big. Any specific reasons as to why, while your competitors have really focused on retail, you've sort of said, okay, we're going to not do that?
It is not that we are taking our pedal of the retail accelerator. It is not like that.
Okay.
But we want to grow consistently. And if you are looking at it, last year we have put in place where our entire retail will be done, will be fully underwritten by there will be a retail loan points are there, which they are only undertaking their entire retail portfolio. It is not all the branches are doing the retail. Now all the underwritings have been done by the retail loan points and it will be delivered at the branch level.
Okay.
So we have entirely verticalized the retail portfolio, and we now expect that this year the growth will be very much, because as you know that the more earnings are there in the retail sector only. So we are also focusing on that. This year we will be expecting a good growth in the retail
sector. So this year the paddle will be on retail.
Yes.
Okay, understood. Now, as a related question, I do want to ask you, you've mentioned the number of fintech partnerships you have, the NBFCs and HFCs you work with. Could you give me an idea of what sort of business these fintech partnerships in specific are able to bring for you as an overall sort of asset mix, or are they still relatively small in the mix?
Yeah, presently we have started our journey with co-lending with many of the fintech and the NBFC partners. Presently we are having around 78 partnership with them actually. It is not now contributing much on the overall portfolio, but this year, because earlier there was a little bit of teething problem aligning with our policies with them, whatever we are having it, our underwriting standards. So now everything is put in place, and so that's what I was telling, that this year you will see a good growth in retail.
Okay, understood. Now I want to ask you about a small interesting initiative that I noticed in your presentation. There was a branch called a Metaverse Branch that was launched by Union Bank of India. Could you help me understand? Metaverse was a big thing. Now it's sort of fizzled out. Virtual reality comes and goes every 4 years. What was the thinking at the bank about doing such a product launch?
If you're looking at it, Union Bank of India, from the beginning, we want to identify ourselves more towards a digital. We want to be known as a digital savvy bank. And there are a lot of initiatives. If you're looking at it, we are having more than 40 STP journeys. That is straight to process journeys without any manual interventions, from loan to deposit. Everything is being done on the journeys. So we are very much very advanced in the digital banking, which we see that as the future of the banking going forward. So this is one of the another initiative. We try to bring a branch experience with digitally to the people who are coming. It is a new initiative.
Did you try out the Metaverse Branch yourself?
Yeah, we tried means you can go and have a discussion.
You can take a look at it.
We want to bring the next things to the people just for
as an optionality.
Yeah, that's
and people have used it somewhat, you would say?
Yeah, it is happening. Still, it has to go a long way in picking up, actually.
Right. Okay, I understand. No, it is an interesting initiative, so I thought I'll ask you about it. Now, shifting gears a little here, I want to talk about something slightly more technical in the sense that now priority sector loans across the board, private banks are always looking for them. There's some shortage here, some shortage there. You are sitting on an excess, especially in some, like I was looking at the presentation, the lending to women sort of entrepreneurs, it's significantly excess. Yeah. Would you I know you have sold PSLs in the past as well, but going forward, we have a lot of demand in the market. The HDFC, HFC merger, at least 3 years, there's going to be sustained demand.
Correct.
Do you see that as a growing revenue pool for Union Bank of India? And what scale would you sort of envision it to be at?
Yeah, see, scale, I cannot die now itself because we are now looking forward that, and it is being on a regular basis, we are doing very well with, actually speaking, we have a Nari Ki Bari scheme is there where we are encouraging the women entrepreneurs with collateral free, very easy loans we have been targeting on that. So, and also our gold loan portfolio is also very much growing on that. So this will contribute to our priority sector lending to a large extent.
Okay.
And we are an active player in PSLC market in selling it. Now going forward also we will be doing that whenever it is available to us.
And do you plan to scale up the sort of PSLC sales that you've been doing?
Yeah, always it will be there. But normally you know that the PSLC market will be very active in the first quarter. After that it will be, but we will be continuously watching, and if there is a good this is available and we are having a pool where we can able to do that, certainly we will go in.
Understood, sir. So now you said that now moving from PSLCs to large corporates, which is your area of specialization, right? Now, we were hearing commentary from large private banks more recently, and they indicated that while they want those relationships, they want that transaction banking business, but on the pricing, especially for the large corporates, they're not very comfortable. We don't want to compete at that pricing. What is your outlook on it? How are you seeing things evolve? And is there a real quote unquote disruption in the large corporate market?
See, large corporate now the market has changed quite drastically now because after whatever that happened in the large corporate sector, now the people who are there are very strong players in the market, and there is always a great competition among the banks in lending to them, want to have their relationship. We look at this as a package. We are also having an excellent transaction banking, which is also earning profit for us. We give us a package to the large corporates and mid corporates, where their transactions, their cash collection services also been taken care by us, so that we can able to quote the rates, which can be, we can say that at the overall package, how much I am getting it from a corporate. Like that only we are going and doing it. Going forward also, we will be in the market. Yes, a large corporate, and corporates are one of the very important clients, portfolio for the bank actually as a whole. So we will continue that, but we want to try to maintain the ratio of around 56 for RAM and 44 for corporates.
Understood. I was also looking at the split in which corporate lending happens. Infrastructure, of course, is the biggest piece, with power being the biggest sector. I want to understand, is the incremental demand coming from the same sectors, or are you also seeing some greenfield sort of loans that you can make with newer sectors, maybe data centers, other sort of newer investments, renewables? How is that playing out? Is it a repeat of infrastruccture that is built already, or some fresh things coming on board?
Yeah. Say infrastructure also, it is not like the earlier infrastructure where you have a thermal powers and discoms. They were taking the major chunk of infrastructure projects. Now the infrastructure has changed. Even in the road sector, we are more looking at a HAM model, which is lesser risk free for the bank, and our cash flows are ring fenced on the HAM model. So we are looking at that. And even in the power sector, we look at the renewables, the green energy, those areas where we can have a good tie-up arrangement with PPA there. We are looking forward that. Beyond this, there is always, now there are a lot of, I will not say, but already the capex expansion has picked up in steel sectors has been there. There are few cements companies also going for some expansion projects. Pharmaceutical and industrial chemicals is one of the very good sector which we are doing it. Real estate is also picking up because it is going to augment my retail growth also for that things. So these are the areas where we are looking at LRD, warehousing LRDs. We are looking at those sectors for the growth.
And just as a macro follow-up question on this, given that we're expecting a global growth slowdown, now that slowdown is being talked about for a while now, it's not shown up yet, but there's an expectation. So would you say you're sparing some of your risk appetite in sectors that may be very export oriented? Because you mentioned, say, specific, sort of like new greenfield investments is renewables have longer gestation periods, but maybe some export oriented sectors that you're less bullish about at this stage?
More or less, if you are looking at the export oriented from our country, it is more dependent on a very labor intensive where you have textiles or pharmaceutical or aqua. These are the things where this is there. But we expect that there will not be much reduction in the orders or anything. There may be for temporary pace, but these sectors will continue to grow well, and because they are going to be a employment job generating for the country also. So we don't have any negative view on all those things. We continue to support them on that.
Okay. Now I want to shift gears a little and highlight something that I've noticed that is unique to Union Bank of India's presentation. A lot of time is spent talking about HR practices and how you're willing to scale them up. Before we get into the practices already, I want to understand from you, because you've been in the banking sector for so long, how has the hiring environment changed for public sector banks, say, in the last 5 years? Is there like a completely different crop of graduates that you meet now as compared to when you were meeting them 5 years ago? Has there been a sizable change there?
Yeah, that is there. Even generally also, we are now, when we are now recruiting, we are now having people who are more digitally savvy. We may not have the earlier people where I have to train them for any of the new initiative which we are taking it. People are understanding this, and the new people are willing to work for that, because the thing is, and that is the reason why I'm saying is, the young generation are really trying to give new ideas. They are bringing new ideas to the table. They want to do something which is from the earlier systems. So we also take our very good inputs from them also, and we try to upgrade ourselves with the new environment system also, because we also want to appeal to the young generation people, our customers, to the bank also.
Is the hiring market tougher than it was 5 years ago? Is there more
competition? It is there, because the attritions are there after joining. People are going for that is continue to be there. But we don't find much difficulty in getting the required force. And regarding HR, I have to say that other than digitally savvy bank, we also want to be known as the best HR practices bank in the industry. And if you look at, we want to be known as the bank customers prefer to bank with, and our staff to prefer to work. A good workplace has to be maintained. We have a new Prerna system is there, where everything is being controlled digitally with the cohort situations. We are doing that. And also all our staffs have been mapped to job tree actually. So family job tree has been completely given to them. So they choose the area of their specialization. They want to do that. So it is more like we want to continue to upgrade them for the bank to be going forward.
Now, speaking about upgrading employees, this is a conversation I had recently with the chairman of the NAPFID as well. We were talking about the HR that's required for infrastructure projects, and both of us discussed that, since private banks were sort of out of the game for a while, there's not a lot of human workforce to go around it. How are you looking at this? Because you're really big in infrastructure. You want to expand there clearly. So you would need project appraisers, you would need specific underwriters. Is there enough of a talent pool there, or do you think there's a need to grow that talent pool?
See, this all, whatever we are now having it, all have been trained, because it is not that a bank can immediately start doing that. There should be a experience where we are also training continuously on those areas. Wherever we find that there is some additional specializations are required, we take the experts' opinion from the market also, and we try to do that till we are getting trained on those subjects. New subjects are coming up. Even if you are looking at it, the green energy, there are so many things are now coming up. We want to have a good input on that, but we have a good pool of trained people are available presently, and we don't find any problem in that.
Okay, understood. Now, so my final question here is about the specific sector-specific NPAs. I was looking at the numbers. MSME seems to be in somewhat of a stress situation at this point. Would you say, can you first help me understand whether this is micro, small, or medium that's under stress? Is it across the board, and what seems to be driving the stress?
See, MSME will be always the vulnerable sector for this one, because any disruption in the market, they will be the first one to be getting affected on that actually. If you're looking at Union Bank of India, from earlier also, we were little higher in the MSME sector. Now there is a focus, we are reaching out to them and try to resolve the issues. If support is required, we try to do that. And also, if it is there, they also will go for a settlement so that they can go on, get along with their working of the
keep operating.
So our NPA portfolio in MSME sector, which was more than 20% 1 year back, now we have brought down to around 12%, which is within the market actually. So we continue going forward. Also, we find that there will be a little stress in the MSME sector, but we are continually engaging ourselves with them in the dialogues, and we try to agree.
Understood. Within the MSME, could you help me understand how the ECLJS loan portfolios have performed?
The ECLJS, as of now, there is no problem at all. We don't have much stress on the ECLJS portfolio, because the repayments are just now, actually, it has all been now coming up. And people now, because now the economy is also growing up, we don't find any difficulty in generating the cash and to service the ECLJS portfolio.
Okay, understood. Now I know I said last question 2 questions ago. I'm just going to close with this one, which is something I should ask every banker at this stage. Is largely, advances have been growing pretty well. I know your deposit growth exceeded advances, but last few quarters that was the other way around. In addition to branches, which is of course everyone's focus right now, building new branches. In addition to branches, how do you see Union Bank of India competing in a digital world where so much marketing happens, so much, everyone wants to go after that CASA customer, get them on board. Is there a way for a bank to differentiate themselves at this point from their competitors, and how do you think about that?
Yeah. Literally, you are told the right point, which bank is also now focusing on that to get the digitally savvy customers more into our fold, literally speaking, and to appeal to them. And our brand, we are also making a lot of efforts. If you are looking at recently we launched in November, we launched our Viom application, mobile application, which is having more than 300 features, including the investments in mutual fund policies. Everything is being incorporated there. So we are also looking for the digital. And as I earlier told, we always look at that we should be more towards the digital banking. That is where we are looking at it. And this one also, we will be seeing that we will be doing good brand marketing in the digital space.
And the technology spends as well.
So it will be there.
All right. Thank you so much for speaking with us, sir. It was great to get an update from you on how Union Bank of India is mapping its strategy out, and it'll be interesting to see how it plays out in the future as well.
Thank you. Thank you.
Thank you to everyone for watching as well. You can catch all other updates you need at bqprime.com.